The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the March 18th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because for each of us to live up to our potential, folks, that is, Tom would like to say, is a beautiful thing out there. Let's go start off our day with a great life philosophy out there. At least I believe it's a great life philosophy. It goes like this. If you can't, you heard me, if you can't, then I say you must. And if you must, well, then I know that you can out there. Let me repeat that because I love that one. That's a little tongue twister, mind bender out there. If you can't, if you cannot, you must. And if you must, folks, then you can. Remember, identify your problems, but give the power and your energy, folks, to the solution. Each of us have problems that we have to solve on a day-in, day-out basis. Here's the key. Spend 5% of your time on the problem and 95% of your time on the solution. I guarantee you that if you do that, that alone will change your life. 5% of the time on the problem. You can identify it. It's pretty easy. No time to dwell there. Spend 95% of your time on the solution. And, folks, that will set you free. Of course, I think over in Cyprus, they spent just the opposite. They've been spending 95% of their time on the problem and only 5% on the solution. That solution being we're going to go after all those bank deposits and impose a tax, whatever it is you want to call out there. I think they got it wrong out there, and that's certainly what has begun the spook of the markets. But right now, we've got the markets rejecting a lower price. You've got the Dow's trading off 50 points, composite down 21, S&P's off 10, Russell 2000 down 6. Hey, one point in time last night you had the Dow, which is off 50. That's not too bad. We'll start off our day just taking a look at the futures contracts. Then we'll go take a look at the indexes out here. And remember, our call number is 877-927-6648. Would love to hear from you. Of course, if you're listening on the radio and or your mobile device at tfnn.mobi, remember this show does stream live to you on those smart devices, smartphones out there. Go to the homepage of tfnn.com. Click on the right-hand side. You'll see the bar there. Our bar, our Tiger, our TFNN bar. You'll see a little area, a little button that has 3 smartphones. Click on that. This show will stream live to you. And again, the archive on Channel 10. As we take a look at the futures markets here, really, everything except for the ES Mini is up over a resistance level. You take a look at the Dow futures, that resistance level, really the gap down of last night, that was 14,328. Right now, trading out at 14,384. That area was tested here coming into the open during that 9:30 to 10 o'clock session, got down to 14,329. Again, the top of that number was 14,322 out there. If we take a look over in the bottom right-hand side, we're taking a look at the Russell 2000, the area of resistance that it needed to get above, which was 937.80. I actually got down to a low of 937.80 at 9:30 exactly. Then coming into the 10 o'clock session, 9:30 to 10, up and above that with a nice little candle and some volume. You had the NASDAQ futures as well. NASDAQ future trading inside its gap down candle from last night. That high out there, 27.74, closed as we were coming into the show open here out at 27.75. Has some good volume. It'll should at a minimum go close the gap out here. The only laggard that we see is the ES Mini. The ES Mini gap down, did it with 57,000 contracts, moving into that gap with 244,000 contracts coming in to the 10 o'clock session. Still not trading above, but I suspect that it may during this show, or it might just simply do that during Basil's show out there. So we will see. I believe that these gaps will get closed. That might set off a little selling action in the marketplace. We'll just have to be paying attention to volume. But let's go take a look at the daily charts out here. Let's go start off by taking a look at the S&P 500, the cash index, and what did it do so far this morning, getting down to a low of 1545.13. 15, that's the first test that we have had of the 1546 level. 1546.72, that is the low of the October 11th swing point. That is a key number. If you get a close below 1546.72 today, that is suggesting that we're going to see some type of retracement. What's that retracement going to look like? Well, your first area of support out here should be and it's a small area of support, should be the high of February 20th. It should be at the 1530.94 level. I suspect, though, that if we get a close below 1546.72 today, that will set up more likely a run for the swing point low. Well, we'll take a look at it. We'll take a look at a couple different ways to actually measure this. The swing point low that I'm referring to is February 26, 1485 out there. Now, here's a couple. Now, the last time that we had any kind of retracement coming off of the lows here back in November 16th, we've really had two retracements. And if we go measure those, let's just go use a visual tool out here. Let's go and I'll draw that. You're going to see it in yellow. So little yellow boxes. Now I'm going to move the first one. The first retracement we saw was from December 19th down to the lows on December 31st. Now I'm going to grab this box. I'm going to take this all the way up here to the last time that we had some resistance. You will see it's not exact, but it's pretty darn close. It's good enough for my line of work out here. And now what I'm doing is I'm coming up to the February 19th high where we do have should have some support up at those highs. But you can see the retracement that we had coming into February 26th almost matching that level. So now let's just come back dollar-wise, take a look at it off of these highs, and we'll leave that out here. Now all I need to do is just go take a retracement from the low of February the 26th out there. That is 1485.01, all the way up to the high that was put in. And what you'll see at the bottom of that box, 1515, would be nothing more than the 0.618 retracement. That is likely, if you get a close below 1546, that is likely where it will first run to is 1550, at least if the same harmonic is in the marketplace that we saw at the first retracement. Now, what's interesting is if we go just simply take this yellow box and we move this yellow box all the way back here. Geez, how about that, folks? We're taking a look at now during the chunky part of the move off of November 16th. You want to see harmonics in the marketplace? We're going off of and I'm not making this stuff up. In fact, I hadn't really tested this for a while, so it is always, I always love it when it works. So if you take a look at coming off of a retracement from the July 20th high all the way down to the low that was put in here on July 25th, take a look at that. How's that for a harmonic? How about if you come back here during the retracement off of the July 5th high down to the low that was put in here? I'm just moving this around. July 12th, same harmonic. How about if you come up here to the high that was put in at June 20th? June 20th. So we're going all the way back to the June 4th lows out here with regard to a little bit of equilibrium harmonic numbers with regard to retracements. You think it's important to understand that and be able to measure it? How about this right here? We come off of the high from September 17th all the way down to a low that was put in very close to a similar harmonic into that September 26th level. Again, you can measure it here again from October 5th down to the low that was put in. Obviously, so we got to just leave that little box here. The large retracement that we did have, the largest retracement coming off of June 4th, obviously was at September 14th level down to November 19th. That would require, obviously, an expansion of this type of harmonic that was done out there. And then as well, moving below, I would say you'd have to break the lows from February 26th out there. That is in the 1485 level. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you this morning?
Good morning to you, Steve.
Thank you. How was your evening?
Excellent. Quite busy last night.
Yes,
kind of like that action.
Yes, I bet you were. I bet you were out there busy. You've been going long, short, the whole thing. So that's a beautiful thing out there.
Hey, Steve. I wanted to bring up a subject and ask a question. And I know you regularly, of course, the start of your business day here, you would have been speaking to Tommy O'Brien and sharing observations. I wanted to bring this to your attention, see if you care to comment, and whether the two of you jointly have any thought on the matter. Specifically, last Friday, the 15th of March, in the precious metals miners stock universe.
Yes.
I noticed that majors like Barrick, Goldcorp, Newmont, mid-tiers, and juniors like explorers and developers, I noticed in a great many of those daily charts there was incredibly high volume in not every, but a whole boatload of those individual names. I mean, just off-the-charts volumes.
Yes.
And the price action was not particularly noteworthy either up or down, but just huge volume. And my suspicion was it had to do with, well, there was an options expiration last Friday, and I suspect there was some sort of index rebalancing going on somewhere or something. That's just
in the S&P 500. In the S&P 500.
No, on the mining equities.
Ah, okay.
And hence, I asked the question, you and Tom, are you aware of anything that was going on to account for that dramatic high volume in a great many mining equities? And if you were, what it means, if anything. So it's kind of a out of the blue question.
Yeah, John, it's actually, so it's a great observation, and I had the exact same observation myself. As you know, our folks, Tom and Daryl Martin were out in San Mateo, California on Saturday, giving a great workshop out there. And one of the things on Friday evening, because I knew Tom was on a little different time zone out there, actually I sent him a text message and said, hey, did you check out all these volume spikes in a great number of the mining stocks out there? And because I wanted his take on it. I haven't gotten his take on it as of yet. So it's a great question. And I don't have an answer for you other than just knowing that it was options expiration and there was S&P rebalancing out there. The GDX itself did not have any kind of a big up spike there. But as you know, or I think that I'm at this stage a gold bull. I think that there's a significant bottom that is being put in. Now, Tom and I differ on this, I believe, at least up through the weekend out there. And I base a lot of that information on price behavior and also what's going on with regard to the large commercials out there in the marketplace. And they've taken the largest net long position, or net short, I should say, the smallest net short position, because they've continuously been net short. So they've taken the smallest net short position going back into 2008. So the large commercials are at least they're placing their trades on seeing a nice run up inside gold. And the way that gold tracks with regard to the miners out there and the key reversal days that we saw inside things like the XAU and the HUI, I think the mining stocks look pretty good here as well. So I apologize, I don't have the full answer for you, but I'll work on getting it for you, all right?
Steve, thanks for listening to the question.
Hey, you bet. 877-927-6648. Dow's off 38. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Master Show, folks. Dow's off 41 points right now. Composite down 16. And across the pond out here, let's take a look and see what's going on inside the DAX. DAX off 1%. That's off 84 points, about 0.6% in the case of the FTSE over in the UK, off 42 points over in Asia last night. Shellacking, you had the Nikkei down about 2 7/10%, off 340 points. Hang Seng down 2% even, off 449. The Shanghai off 40 points, about 1.6% out there. Commodity-wise, right now we've got gold up at 16.06. It's trading up 13.50. Silver's up 2 pennies, so silver kind of flat out there. Light sweet crude backing off, down about 63 cents right now, out at 92.82. You've got copper's down. Platinum is off 13 bucks out there in the marketplace. You've got the let's see, volatility is up 15% here today, up $1.75 in the VIX index. Our call-in number is 877-927-6648. Pop into the downside now. We've got Priceline off $10. Intuitive Surgical is to the upside. Apple's up $5 and change, up 1%. Rackspace up $3. That's up 6% out there. You've got Value Click up 7%. VC LK out there. Bristow Group up a couple of percent. To the downside, Google's off $5. LinkedIn is off 4. Amazon down 3. Equinix off $3. MasterCard off 3. You've got Goldman Sachs off a couple of bucks. We'll start taking a look inside the market start taking a look at the sectors. But first, let's go over to the ETF structure, and let's go to peek in and see what we've got going on inside the ETF structure. Let's start with the SPYs. So if we take a look at the SPYs, the October swing point that we're dealing with here, the October 11th, 2007 swing point, the low on that is 154.54. That so far this morning was tested. The SPYs actually got down intra-session so far to a low of 154.20, trading out right now at 154.98. First test of that swing point low. That still keeps in play here the 157.52 target, which is the top of the swing point inside the S&P. Volume so far this morning in the first nearly hour of trading, 34 million shares. So pretty decent open with regard to volume. And the volume that it is breaking, or not breaking, the volume that it's tagging now that it's inside that October level, I think it was a couple 100 million shares. Let me move all the way back there. I had the number. It's the black line that was out there. But to give you the actual number out here, and I'll write that down, 233 million shares out there. I want to just make sure that it's notated on my screen. So that level, which is the swing point low from October in 2007, so far has held. If that holds, then you don't have a false break to the upside here as it got above that swing point low. In fact, what it sets up, it gives you the message that what the S&P and the SPYs want to do is still go up and test that 157.52 level before it releases any information to us. So that's on the SPYs. Let's go take a look at the diamonds. The diamonds here, nowhere near the October 2007 swing point. That does have 21.8 million shares. Of course, that was taken out with 8 million shares on March 5th. Biggest volume day was Friday. Options expiration, 10 million shares. It was really a sideways move, but the Dow diamonds not anywhere near coming down and even testing the level of that October 2007 swing point. Where does it want to go? That's a great question out there. Let's just leave it. I'd say where it wants to continue going. It wants to move higher until the S&P does its test out there. If we want to go take a look at the Qs here really setting up an opportunity to provide us with some information about the marketplace. You've got Priceline traveling down about $10 and change right now. Google's off only $4. We know Google has tested a potential area of support out there. You've got Apple up 5. You've got Intuitive Surgical with a nice little counter trend move out here, 5% up, $23 and change. And until the Qs are able to crack and certainly close back below that 66.48 level, they're trading right now at 68.32. Now, did have some bearish candles looking on Friday, and today obviously a gap. Well, the gap down. Let's see the low here. 60 for Friday's session is 68.34. So far, the high 68.35. So not even an open gap out here. It is traveling below that 9-period exponential moving average out there. Has not done that really. Last time that we saw that was back on February 20th out there. So a little bit of a bearish overtone. Boy, time absolutely flies here. 877-927-6648. Although the markets are down, we're not seeing any real significant reversal signals. In fact, just the opposite. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 37, composite down 16, S&P's off 8, and let's peek in on King Dollar out here. We've got the weekly chart up on the screen here right now. Weekly chart up on the screen shows a fairly strong resistance level. That resistance level really coming off of, first you can take a look at the trend line coming off of the June 11th high out there. 89.10 is your starting point. Your next touch point is the bearish engulfing candle that occurred on August 3rd. That high is 83.61, and what you can see if you use those two levels here, you'll see that King Dollar end right in that resistance level 2 weeks ago, March the 8th, as it got up and closed at 82.77, closed at 82.94. Also was completing last week a nice .786 Gartley sell pattern. Beautiful Fibonacci numbers out here, .786 retracement. That retracement off of the highs from July 27th, 84.25. Down to the lows that were put in on September 14th. You also had a 1.618 expansion of swing points. That expansion coming off of the high of November 16th down to the low that was put in on February 1st out there. So what we can see here, and then last week, to cap it off, you had a bearish engulfing candle. Now, this week so far today, when you consider where the U.S. dollar index closed, truly gapping up here and gapping up. Right now, it's trading up about the U.S. dollar index about 30 cents and right into the resistance area. Now, if the U.S. dollar index clears, it's got really horizontal resistance would really be, if it clears the the high of last week, which is about 83.18. That really ought to set up a move for the next horizontal resistance level, which really is like the red horizontal line coming off of the highs, believe it or not, of August 27th, 2010. You had a bearish engulfing candle there. We had another one that's just a tad higher. That level is 84.25. So anywhere between 84.25 to 83.64 would be the range where it would next find horizontal resistance. The level of 84.25, that was July 27th, 2012. Also a bearish engulfing. But right now what's taking place is nothing more than, in essence, a retest. Let's go put this on a daily chart out here. And on the daily chart, just really a retest of some resistance out here. So the U.S. dollar index really has to clear that 83.18 level before it wants to move up out there. We'll see if that can do it. It's really going to be all about the currency markets. If we take a peek in on the currency market, the U.S. dollar, Japanese yen, that is rejecting its move lower. It's rejecting it's not rejecting. A support area has absolutely held on that. That says it wants to at least go back and test its highs. Its highs would be moving back into about the 96.70 level. And you also have the yen, which has worked off some of its overbought condition out there. So it should have some energy. We take a look at the pound. You've got the pound getting stronger, and the U.S. dollar index will get weaker. But the pound is the third weighting within inside that basket of currencies out there. So it'll have some impact. But the bigger so you've got the pound. You've got the U.S. You got the Japanese yen, which is getting weaker, and the dollar getting stronger. So those two can kind of offset each other. The pound and the yen, they're roughly about the same weighting structure with inside the U.S. dollar index. So that means we have to leave everything really up to the queen. That would be the euro. If we take a look at the daily chart on the euro, right now it has tested a support level. That support level, nothing more than the swing point that was generated on December 7th, that low 1.28758. So far, that has held out there. It's got some resistance, so looks to me like what the euro is really doing is just consolidating here. The level of resistance is right at about the 131.360-ish and a change level. So that's what's going on inside the currency market. If we take a look at, let's go peek in on bonds here. Bonds have moved quite a bit higher. Interest session last night, giving up about half of its gains thus far, but bonds has volume in it today. So far, 258,000 contracts, and bonds really want to run back all the way up into the January 2nd resistance level. That price point is 144.29 out there. So bonds want to continue to make their move higher. Light sweet crude right now rejecting lower price this morning. The bulls have moved back in here. You had a little bit of a sell-off. Let's go take a look at the retracement that it did off of the low swing point on the daily chart, March 4th, all the way up to the high that was put in on Friday. And so far all it's done is a 0.382 retracement. And you can see, just taking a look at the candle here, the bulls certainly trying to take back control of oil. Not a good thing for you and I at the pumps out here. Price-wise, if you're long oil, what it does set up is a move into not only 94, 84. If this is really the only retracement, and we start to see the U.S. dollar index pull back here, what you will see is, quite frankly, you'll see it run all the way back up to its highs. It'll do more than a 1 to 1A to B equals C. 97.50. 1 is the 1 to 1.272, but that would take you right into the swing point of January 30th out there, and that high is 98.24. And we do have oil been traveling in a rising price channel here ever since the lows that were established back in the early part of June, or late part of June 2012 out there. So oil not suggesting that it wants lower price here, at least not just yet. Peeking on silver, see how silver is behaving. Silver really just having a sideways day out here. Just really, been in a very tight range, small-bodied area out there. Looks like maybe longer positions just simply being taken and being held here. Gold acting a little bit differently. Gold right now trying to take on, certainly trying to close above for the second time the body of February 20th out there. That is 1604.20. It's at 1604.90 right now. Coming into the most recent swing point, which was on February 26th. that had 164,000 contracts, up there right now with 120,000. So it's coming in there with some decent volume. A bullish case here, very bullish case, is going to be a close above 1619.70. That is the February 26th swing point high right now. I would say even more bullish would be, quite frankly, closing above the January 4th level, the low of that level, which is 1626. That is a hammer candle. We'll see if that acts as an area of resistance or if gold can actually move higher. Now, a dead cat bounce is nothing more than getting to 1647. I suspect where gold wants to travel to, more likely the 1704-ish range. That gets you back to the 618 retracement and right really into the January 22nd level of about 1695. So that seems to be the range that gold wants to move to. If we go take a look at some of the sectors within inside the S&P, let's go check out, see what's going on in the financial sector. The XLF, specifically, the XLF has been on quite a run. The XLF gapping down this morning. Let's see if that gap has been filled here. The March 15th low, Friday's low, 1830. So far, intra-session's gone up to 1827. Volume so far today, 12 million shares in an hour and 10 minutes of trading. Made a high with 67 million shares here a couple trading sessions ago. So volume-wise, about that same type of volume. But we know volume will dissipate during the next several hours out here, or should dissipate. You've got the walk of that 9-period EMA. It's just trading slightly below it. Your 9-period EMA on the XLF is $18.24. That's trading at $18.25, so just slightly above it. The first area of real support out here should be set up here by the bearish engulfing candle. That would be from the trading session of a little bear sash candle actually on February 20th. That would really set up the prior high, so the prior day's high, which would be the 19th. And that level is 1794. So that's really a first level of support. The real support then, that being so close, would be the bottom of that gap up from March 5th. So the real support here, support 1, we'll call it, is 1787. That's the March 5th gap up. That had about 67 million shares as well. So right now, not seeing a breakdown inside the financials yet, as of yet. No volume off the top or anything like that this early into the trading session. Let's go take a look at the energy sector out here. The energy sector coming down this morning, rejecting this downdraft day from February 25th. That had 13 million shares today so far. A couple million shares here. You had really sideways action on Friday, giving you no signal really whatsoever. You're trading back inside the swing point high out here, which was from March 14th. That has about 10.9 million shares. So you're back inside there with some decent volume. With 2 million shares, that rounds out to about probably a 10 million trading session day. So it's not exactly moving up there with light volume. The area that should have acted as support, though, was really this trading session high from February 14th. So the number to be watching today on the XLE is 79.51, but that only has 7.3 million shares up there. Of course, really the benchmark, the 13 million shares from February 20th. That's what I would be using. So that's on the XLE. Let's go take a look at the XLK, see what's going on inside the tech sector out here. Tech sector trading out at 30.16 right now, trading just below its 9-period exponential moving average. That level 9-period is 30.19, trading out at 30.16 right now. So right here you've got in the XLK, so here you've got a test of its gap up. Let's take a look at this. Is the first test of this area. So it is, it is junior support, but still support nonetheless. We'll go ahead and put a red line across the bottom of the screen. Let's take a look at the volume associated with that as well. So you take a look. We're looking at, folks, March 5th. On the low there is 29.94, 12 million shares. Moves down this morning, has tested that area, has done 1.4 million shares. 1.4, it would have to have some real substantial volume today. So it's going to be should be testing that March 5th low on lighter volume, has rejected that. That sets up, and what's important about this is we're looking at a 0.786 Gartley. I'm going to get rid of the 0.618 Gartley. When a 0.618 Gartley fails, what happens next? Yes, moves to the next level. This was a Gartley sell pattern. Let's go draw in that pattern here. That set up the 0.786 Gartley pattern. It's actually just a tad higher, hasn't actually gotten there, but we're going to say it's close enough for our line of work here. The actual number of the 0.786, well, I'll give you the actual number. The actual number would be the retracement off of September 19th. Well, I didn't draw it properly. How about that? So I need to go back out here and redraw it properly. The actual number is 3077 on the XLK, but let's go draw this pattern back in here. Let's see if I can actually anchor to the proper swing points here so that we have a good-looking pattern. So 3077, and so about 3077 would be the exact number. It doesn't really have to hit that, but I might as well give you the exact number since we were drawing the pattern out there. Right now, what you are seeing, though, is creating a support level here, and that's a pretty strong support level. It was really a part of also the consolidation range along the tops and bottoms inside the energy sector. We'll just go ahead and draw some black lines across the screen, both at the highs and lows out here, and that really setting up right about here. Well, let me move this line up here. So we've got a gap up that is still unfilled. That takes you all the way back into December 31st, but doesn't look like that is its first course of action. Now, the important thing about this 0.786 Gartley is that if this fails, which it hasn't gotten up to the top of that, I'm going to just change this here so we can see the number at all times. 3076-ish is if that area fails, not only will it set up a run here, folks, for the swing point high of September 19th, that level is 3174, it'll go ahead and make an expansion. This will be a failed Gartley sell pattern that will very likely turn into a butterfly expansion. Not overnight. Doesn't mean that there won't be pullbacks, but it is something that we should absolutely keep an eye on. Back inside the sectors here, let's go take a look at that XLP. That's the consumer staples sector that's been on fire. Now, the consumer staples sector actually showed significant weakness here on Friday, gapping down with 9 million shares. You also have looks like a little bit of a gap today. The low of Friday was 38.41. The high so far today, 38.39. So you've got another gap out there. Probably the XLP, not probably. The XLP is something we're going to want to pay attention to. We'll see if it can close the gap and see if it can get back above the Johnny Cash, Basil Chapman 9-period EMA walking that line. Right now, that 9-period EMA quite a ways away inside the XLP. Would have to get up to 38.53 at this moment. Could change, obviously, as trading continues during the session here. But 38.53 is the number for the XLP out here. And the XLP, now, what it has done as well, let's see, what is this really coming back into? Not a darn thing. So it's below this downdraft there. We're going to say that really was level 1 with regard to support, which now becomes resistance. So this is going to be the area to watch. We'll draw let's draw a black line across the screen. That's that big gold bearish engulfing candle on February 25th out there. So that high is 38.45. It's trading at 38.36. And that level held on Friday, even though you had big volume on the way down. So what you'll want to be watching for today, a true rejection in one of the sectors, the strongest sectors with inside the S&P, would be watching the XLP. That closes above 38.45, and the XLP would be suggesting that it is not ready to go down, and it wants the S&P to go test that October 11th, 2007 high out there that is still game. 877-927-6648. Right now we've got the Dow trading off about 33 points. S&P's down 7. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
877-927-6648. The Dow's off 32, S&P's off 7. And in the first hour this morning on the Trader's Edge show, we were taking a look at this chart here on Apple. Apple off of the bottom here, going to have a decent counter trend rally. Where will it run to? Well, the first area of resistance is going to be another test of that candle from January 15th, that swing point low of 483.38. It wants to make a run for that. It's got some decent volume in it so far this morning here. It's done about 7 million shares. That 7 million shares, well, on Friday there were 22 million shares, but really in an hour and 20 minutes, 1.7, not too shabby out there. We'll see how it ends the day. But Apple has broken this descending price channel that it was in. Did that on Friday. Did it with some conviction out there. Today having some additional follow-through out there. And so now it will run to some horizontal resistance levels, we take a look at the intraday chart, we take a look at a 10-minute chart here on Apple, we can see it's moved into the oversold or overbought territory, so it's going to need to work its way off. It can do that just simply by moving sideways, and then maybe a little bit of a pullback here. You had some real nice volume at the open on Friday's session, 3.9 million shares, and that has really held. You had some decent volume here coming right into the 9:40 session this morning, 1.6 million shares on the way up. So Apple is going to put a little bit of juice into the NDX 100. Of course, it's going to have to deal with Priceline, which is down $8 right now, and eventually probably have to deal with Intuitive Surgical as well. Intuitive Surgical this morning up $17. But that is right now looks like nothing more than a little counter trend rally out there. Goldman Sachs trading a little bit lower this morning. Let's go peek in on Goldman Sachs here, trading out at 151.42. Goldman has set up a area of resistance set up right here from February 20th. Had that little bear sash candle out there. We can see the bears also, another bear sash candle that was present here on the 8th of March, and a little bearish engulfing candle, quite frankly, on the 12th of March as well. Does have some support, and that support none other than the Three-River Morningstar candle formation. That is a three-candle formation. That's between the February 25th, February 26th, and February 27th set of candles. So support here on Goldman Sachs at 146.71. Just trading inside there. Volume-wise, you had some decent volume on Friday. Did 7.3 million shares. The swing point low has got 5.6 million. That is the February 26th level. But right now, looks like just setting up nothing more than a consolidation range. Let's actually go ahead and put Goldman on a weekly chart out here. Let's see what we've got on the weekly chart. And on the weekly chart, no bearish candles other than stitching a couple together. But really nothing here that looks extremely bearish to me. If we take a look at A to B equals CD patterns, I would say we'll use the swing point low the week of June 8th, 2012. Well, that makes sense. That would be the June 4th low. We'll use as our high November the 9th, and we'll use as our low November the 9th as well at 113.84. You can use one candle for both your high and low, and that seems appropriate here. So what did Goldman Sachs do on a weekly basis? Completed a 1 to 1.272 A to B equals CD. That was to be expected. You can see as it moved up to the level of 1-to-1, no bears, and we can see it did a 0.382 retracement. That told us that this was likely one of the other 40%ers, meaning that it was going to do more than a 1-to-1 A to B equals CD, and in fact it does a 1.272. The exact number, 159.75, but all it got up to was 159 even. Hey, I wonder if Basil's round number high. Speaking of Basil, he'll be up next, folks, so stay tuned. Basil Chapman, then Larry Pesavento. We've got Daryl Martin following Larry, David White 2 to 3, Ken Shreve 3 to 4, Tom O'Brien from 4 to 6. Thanks so much for being here. Have a great trading session, a safe day. Look forward to seeing you tomorrow, folks. Take care.